Huge dividends, massive growth. Can you have both? Well, tonight we'll show you how with our carefully selected ASX stocks that are providing huge dividends with strong growth potential. With insight from our government-accredited share trading education, which has our experts regularly called upon by major media Australia-wide, I'm Dale Gillam, joined by senior analyst Janine Cox and Philip Tortevsky, and we're Wealth Within. Good evening, team. How are we?
Fantastic. How are you?
I'm super fantastic. I'm in Melbourne and the sun's shining. What more do you want?
Yeah. Is it?
Yeah, but my footy team's not winning, so I'm not really happy about that one as well anyway. But before we dive into some amazing stocks, I want to discuss something I find a lot of investors struggle with, and that is, how do I pick the right stocks for my income portfolio? Is it just the highest dividend or a little more to it than that? And I'm going to go to Janine first because you're our resident dividend guru, and then I'm going to go to Phil.
Yeah, thinking about getting the highest dividend is really fraught with danger, especially for the uneducated, because the worst thing that they can do is think, I'm, going to get 10+% or go for those really high yielding stocks, which tend to be the most risky on our market.
That makes sense. If it pays more dividend, I should own the stock, shouldn't it?
No, it's about getting what's safer and more reliable. If you've got an income portfolio and you're wanting to have lots of nice juicy dividends, then go for those sort of stocks that are going to pay up. And the ones that continue to pay, even through market booms and crashes, are the best on the market. So look out for those, because obviously we're coming up to that point in the cycle where yield is going to be even more valued by investors.
So you're telling me I shouldn't buy the highest dividend yielding stocks?
No, I'd say probably go for something around the market average. Somewhere between 4 and around sort of 6.5%, 7% is probably a good yield.
All right, so we'll get more into that later. But anyway, when we do look at the market landscape over the next couple of years, where could the best income plays be coming from? Now, I'm going to go to you on this one, Phil. Right. So where can we get better income from?
I think the big thing to dissect is what Janine said. What is the landscape right now for our market? And when you look at things like the PE ratio, 3-year, 5-year ratio, our market is actually at fair value. So we're not dealing with an environment that, when you listen to the media, like out in the US, is really overstretched in certain areas. On that lens, the whole market becomes an option. But then when you think, okay, maybe if we do come into an environment where things may get or start to turn down, and we look at sectors like healthcare, which are defensive, real estate, which is defensive to some degree, these sectors have already come off 50, 60%. And they're the prime sectors to do well if the market does turn a little bit bearish. So I think being sector specific is important too, not just picking, like Janine said, a yield for the sake of a yield. But I also think you can use yield to your advantage. So you can pick high yielding stocks if you do have a focus on being active, getting in and out, because when you can time the market right, you leave yourself a buffer. If you've got a 10% buffer on a yield with a good price, a stock that's rising, you can get the best of both worlds. And I know there's this misconception a lot out there that it's either one or the other. It doesn't have to be.
All right, so let's get into some stocks, and I know Janine gets excited about all the stocks. So what's the first one we're going to have a look at?
All right, the first one is Tower. Now this one is TOWER, just to be clear, and the code is TWR, right? So looking at this one, we can see that it's actually been in a long-term decline, but what's attractive about this is it's come off this base, which is a really great test of a low on any stock, and then has had a huge acceleration out above the angle of the trend. Now, I think, you'd be quietly waiting to see where this current correction comes back to. It could come back to around 120 or thereabouts. As long as it stays above that dollar mark, I'd be really happy with this one. And to get an 11% or 12% return on it, that's a really great return. But I would still be waiting for direction. So wait for the fall, then check the rise. And I'd watch this level here, because obviously it's met resistance there once before, and I'd like to see it clear that. But there's a pretty good upside. And it's like what Phil was saying before. If you can get a good dividend with a potential for growth, and that's 44% from the level I've marked at $1.80, and you may even be able to get in earlier depending on how it unfolds. And those who do our courses will know what to look for. Then you'll see that there's nice yield plus nice growth. It's a good income plus growth stock.
Yeah, but it sounds to me it's like 11.9%. That's huge. Like, I find a lot of investors will just their first criteria is the dividend yield. You know, they look for the best dividend yield first, and then obviously a lot of them buy and hold. Is that wise for them to be doing that, or what should they be doing? I mean, obviously you're looking at this stock not just from a dividend yield, you're looking at it from a technical perspective. So what's more important to you?
Direction, every time.
Direction. So you're talking about they should be looking for the direction of the price first and then
Yes.
the dividend second.
Exactly.
What are you thinking, Phil?
I agree. You know, just looking at that stock there, it's definitely more volatile. And just looking at what we've seen, you know, since November 2023, we're in a bullish move. We're still offering an 11% yield. If this was an 11% yield and the stock was in free fall, I would change my mind in terms of, you know, because sometimes it is true. You can get companies dangle the carrot and provide the big yield just to get some traction and some buyers come into the stock. But I think the way it's unfolded, there's been serious buying. It's crossed the dollar. Now we're pulling back. When you think purely from, I guess, a pattern point of view on how this stock is unfolding, it could very well be argued that it is now breaking out into some kind of expansion, you know, medium to long term. So I agree, you know, watch this 170 level really closely. Maybe not today, right now, the opportunity, but whilst it holds this momentum in this trend, I mean, that's serious buying through there. So I would think may continue with a nice yield at these levels. Why not?
All right. So have you got another stock?
Yep. All right. So the next one is WAM. Now, WAM Capital Limited. This is offering a 10% yield. And, you know, for all those out there that think, all right, I'm thinking about putting my money in bank interest, well, you know, this is going to be paying double that right now. And it's, again, another one of those stocks where you do see long periods of stability, which is quite nice. When we talk about where it is today in terms of what you're getting a stock that is going back to 2002 prices. And really throughout history, if you were to measure where this stock has gravitated back to in terms of price, it's been exactly where we are today. That's what makes it exciting for me, because even if you're thinking a pure income play at these levels, you know, with really strong technical support, you're getting it at a price you may not get again for a long time, because it's only since 2002, it's only held here for, you know, there was 3-year period through there, but then it went for a long period where we never got a good opportunity back at these levels. So unless you were super quick around COVID, but we're there again, we're consolidating. We're coming off a really decent pullback. I'd just be mindful also, if you're thinking more long-term, that potentially we've just got to get through this downward momentum here on the downside. If we can get through there, then that would be even more bullish. So I'd say short-term, opportunistic, great at these levels. If you want more confirmation, wait for 180, 190.
Oh, okay. But you raise a really good point, because you're saying, you know, around 10% and the stock you had was 11%, you know, and saying, well, you know, the banks are paying 2/5 of nothing, you know, 3-4% on the dividend. And it reminded me, like many years ago, I had this young person in my office, and they'd had $100,000 they'd saved up and had it in the Commonwealth Bank on a term deposit. And I said, well, why do you have it in Commonwealth Bank? She goes, oh, because they're really safe. I go, so why don't you own the bank? And she goes, what do you mean? I said, well, they're paying you how much? And she said, oh, 3%. I said, but the dividend yield is twice that. And it's gone up 30% in the last 12 months. So if you trust the bank to have your money, why wouldn't you own the bank? And it was really interesting to see her look on her face. She goes, oh, yeah, well, it's the same. To me, I said it was the same thing. Yes, in a term deposit, your money's capital guaranteed, because it's underneath, obviously, legislation that's guaranteed. But the point is you make more money by owning the bank than you do putting your money in as a depositor from that point of view. But to me, looking at these stocks is, okay, so people don't often understand dividend yields and what the yield is based on, and depending on how that reacts to the share price, because what yield you're buying is, what yield you get is depending on the price that you've paid for the share. Did you want to explain that better to people? Did you want to have a go at that, Janine? Because a lot of people think it's, you know, if it's 10% or 11%, I'm going to keep getting 10 or 11%. But it's not the case, is it?
No, well, I mean, if the share price goes up and then you go to buy it at a different time, or you go to add to your position, you're going to be buying the yield at a lower percentage return, and the share price is going to be higher. I mean, it's really about looking at the dollar amount as well that they're paying.
Yep.
I think, and with Commonwealth Bank, you know, it's like you say, it's often going to be, you know, highly valued by big funds, individuals. It's going to be in the ETF, so it's in the top of our market. So it's more likely to keep going up if our market's going up. But I wouldn't fall in love with holding Commonwealth Bank, and there would be precursors to whether to be putting that 100K into a bank or any share. Because what if that young person was going to use it for a deposit for a house at some point? I mean, you and I have had plenty of conversations with people who were wanting to put money into the market thinking they're going to get a dividend or some growth in the short term. But if they want to have it in 2 years' time, is that necessarily a good idea?
Did you sit in on that meeting with that girl with me, did you? She knows me too well, doesn't she? Can we have another stock?
Yes, of course.
I'm assuming you've got another stock, don't you?
Yeah.
Yeah.
Okay, always. GQG Partners Inc. This is a CHESS Depository Interest. GQG is the code. Now, you can see this incredible level that it's come back to, and it's always fascinated me how stocks do this. And the first time I ever sat in a workshop and looked at the way that stocks unfold, I thought, oh my goodness, you know, we've been absolutely cheated by our education, because why didn't they teach us this in the first place? That's a whole different story. But just looking at the interest, the income on this one, nice 10% return. If we put a trend line just from Dale's book down here, is a really nice, safe way to protect yourself and look at where the safer times are to be holding any stock. I mean, that looks really interesting to me. So, you know, I like it. It's trading at around 140, 150 at the moment. And I'd even be willing to let it go a little bit higher. We can see that it's hit its head at this price over here a few times. Some people may try to get it earlier than that when it gets through that line, and others may wait for a more conservative position above that level. But either way, if it starts moving up nicely, then that could be really good. The downside challenge here is with any of these stocks that are paying high dividends is to watch out in case it turns, because I guess it's a cautionary tone that I'm putting on this, because if stocks are paying a high dividends, the temptation is not to want to let it go.
Yes.
Yeah, but so what's the price or what's the cost to you if you think, okay, I'm getting a 10% return, I'm just going to continue to hold it. But the downside risk is the issue, isn't it?
Yeah, but that's where what Phil was saying earlier, if they're getting 10% dividend yield and you've bought, let's say you bought it $1, then you've got 10 cents.
Up
at 90 cents,
yeah.
if you've got a 10% dividend yield, that's effectively lowering your buy price to 90 cents if you've got that 10%. If you've got it 2 years in a row, it's effectively lowering it to 80 cents. So that's sort of what you were saying earlier, wasn't it?
Yeah.
So it's a bit of that balance between risk and reward and what you're actually doing. But I agree with what Janine's saying.
Yeah, but it also proves that if you can time the entry well, how much of an advantage does that give you now?
Correct.
You know?
Yeah, because you'd want to buy it at $1 and it go up and still get the 10%.
There you go.
So you actually make far more money. But anyway, so if you want to learn how to do all of that, then you may like to get a copy of my book called How to Beat the Managed Funds by 20%. It's still for free. You just got to pay the shipping. It is on our website, so just go to wealthwithin.com.au and go into our store and you'll be able to find this book and my other books and DVDs, etc. But it goes through how to create a dividend portfolio is in this book, as well as a few other portfolio styles and how to find the stocks and how to manage it all. But anyway, head over to our website and get your copy for free, as I said. Now we've got another stock. I'm going to go to Phil.
All right, let's go. GrainCorp. Now this one is another stock that has spent a lot of time just sitting at, and it's a cyclical type of stock. Just one look at it, you can clearly see this one is very cyclical in nature. When we look at where we are today, that's the big part that is really interesting. We're at such an important level, that 466, like Janine said. You know, it never ceases to amaze how many stocks do things like this. And to me, all they're doing is just reverting back to trend, you know, long-term trend. Most people don't realise it because they're too busy stuck on a 1 minute chart or a daily chart. But when you look at the big picture, you see this always. And you see opportunities that, you know, I don't like to use the term lightly, but once in a lifetime type buying opportunities that you'll only see on these time frames. So back to that chart, when we see where we are today, what is so exciting right now is that we're back to this really important level at 470. It's paying a 9.6% yield. Throughout history, if we measure how far the corrections have been on this stock, I mean, we had a 60-odd% correction through there. We had another correction coming down about 58% through there. And the most recent correction that we've had is, I would guess, around that same level, 55. So someone looking for income going, well, I'm looking to buy this stock soon as an income play. You have a lot of probabilities in your favour in terms of how far this stock is likely to fall and where it's at right now. If you are looking to be professional about things,
We are.
well, we are. And so is right now the moment to get in? Is there confirmation? No. But this is where obviously, gaining knowledge, learning the skills, learning how to do it properly, that's going to give you the real confirmation and the edge to buy at the right time. So I would say great stock to be looking at, probably the best of the bunch for me right now to be looking at in terms of opportunity, but a little bit more in terms of price just to get the top-notch entry.
When we bring up the rest of the stocks, I'm going to ask you what your pick is. So both of you keep thinking about what you're doing. But anyway, stick around because we have more amazing stocks coming up shortly. But for now, it's time for our trending topic of the week. Janine.
Well, Dale, bird flu has arrived in Australia, and the big question is whether this poses a huge risk for our market. The answer actually depends on whether this turns into a bird flu pandemic or just an isolated case. Now, when a different bird flu virus that came to Australia in 2024 proved that Australia can contain outbreaks, this was an important move by Australia to be able to do this, but the virus has just proven to cause much larger disruptions overseas. So that's the current virus strain that we're seeing in Australia now is actually far more dangerous than the previous one that we've actually proven that we can overcome. Now, if it reaches commercial farms, the market could discover that eggs aren't the only thing getting scrambled. I couldn't help myself with that one. Now, if commercial poultry is impacted, this will trigger supply shortages, higher food prices and pressure on consumer staple stocks like Woolworths and Coles, and in particular Ingham's, which we will take a look at shortly. But then it would go much further. In an environment when inflation's already a big risk to the bull market, the famous Australian banana inflation shock that occurred in 2006 after Cyclone Larry devastated much of North Queensland's banana crop. Now, banana prices surged by around 250% in the June quarter of 2006, helping push fruit prices up to a record 52%. Treasury estimates that fruit prices added around 0.5 percentage points to quarterly CPI. So think about what higher chicken and egg prices might do. This could be a game changer for a rate cut. Now, is there an immediate risk to the market? Not yet. It's too early to tell. What happens could depend on Australia's largest poultry producer, Ingham's. Now, the company has locked down its Western Australian chicken breeder farms after a deadly strain of this flu was detected there for the first time. So let's go to the charts and see how Ingham's stock price is holding up. Now, you can see there on the left-hand side that, it hasn't been, smooth flying for Ingham's at all for a long time. If we look at the all-time high, we can see that there's around more than 60% fall in its share price. Now, this is really a disaster waiting to happen for Ingham's if this turns into be something else. So really good decisions being made there by the company to get everything locked down. And at the moment, the stock's doing what we like to see when a stock bottoms. It's actually really important to see it have a retest of the low. So far, these lows have just been getting lower all the way down into around $1.69 there, you can see back in May. But since then, the stock price was actually moving up, and we saw that into the week ending of 19th of June. Now, on the news, that we've seen a drop in the share price, but so far a bit of a recovery. So that's actually a really good sign for Ingham's share price and a vote of confidence in the stock. But I'd say if Ingham's comes out, with the first prize at the fair, we could see the stock price rocket back up to somewhere around this 240 level at some point. So I'd just be watching. I wouldn't be trying to jump into this early just on the basis of speculation. That it would be very dangerous given that it's a bit of an unknown quantity. And, you know, if things did accelerate in the opposite direction to the way that Ingham's obviously wants this to go, then that low is at risk. So, but so far, it's holding steady.
So the stock price has gone to the birds too. That's what you're telling me.
Yeah.
Something like that.
Yeah, well, it had been for a long time, but is this a turning point in a recovery? If they handle it well, could very well be.
It could be, because, I mean, it's been falling for like a decade, hasn't it, really? So how much lower can it get? Like, even though if there's a bird flu outbreak, how much more lower can it get? So
exactly.
This could be a turning point for it anyway. But maybe we should tell them to get their flu shot for all their birds, maybe. Anyway, but if you do want the skills to analyse stocks, just like you've seen Janine and Phil do tonight, visit our website, wealthwithin.com.au. But now we're going to get back to our topic and get into some more of these awesome stocks. Now, remember, guys, you need to pick your favourite stock before we finish, so keep that in mind. I'm going to go to you, Phil.
All right, next is IPH. Now, this one here is offering a 9.5% yield, really nice yield. And I think, again, we're at such a crucial level for this stock, back to long-term momentum. What's promising is we've seen buyers come in and really shoot through, like unlike Ingham's, which is yet to get that push. We're now seeing the push, which is quite nice, expected at such an important level. I think the other big thing to really keep in mind when we're talking about IPH is what's happened through this period here. In 2003 or two, where we're back through there, this stock, it must have been a relisting.
Well, I could have had a stock split.
A stock split, sorry. But there's a big gap through there, and you know, it's almost as if this is a new all-time low. So that we're dealing at base prices right now. So again, thinking, where have we seen the best opportunity to get in and see upside? Well, it's been from this $3 level. So tie that on top with getting a 9% buffer, 9.5% buffer. And if we go on that weekly chart right now, I think the biggest test or market to see is how it deals with where it's about to touch right now. Can it get through this real momentum change and shift through? If it does, I think when we look at the volume has really been picking up through this low. So there are a lot of nice little markers about this one that it could be turning the corner, and we're about to find out.
That's good, isn't it?
Yeah, that's the good thing.
This is my pick so far, but anyway, we'll wait to see the rest of them. Janine, you got the next one.
You don't get to change your pick, you know, that's it.
Hey, I go one pick and you give me 2 and 3. So don't you give me rules. See?
All right, I got him, didn't I? All right, the next one is, and I need binoculars here, FPR. So you can see that we've got this long-term support level there, a 9.2% dividend yield, which is really nice. And we're yet to see a retest of that low, because you can see here as it's been coming down and it fell to a low of 222 in March 2026. If you can see that there, then you know that the lows have been getting lower. We want to see a retest of this level before we draw any conclusions about where it's going, but it could just pop out of the blocks, and this line is as good as any yardstick to tell you what's going on. And I really like the fact that we're seeing this apex here, and there's the buyers and sellers are reaching agreement about the price, and eventually it's got to break one way or another. So, but don't just assume that it's going to do that and buy it for the 9% yield. Just wait until it does this retest, which it's doing now. We should know, I think, reasonably soon, given it's had a little bit of a consolidation. It's already tried to push through the angle of that line, but closed back down at this level. So that's a bit of a telltale. Some profit takers coming in there to take some money off the table. So I like this one. It looks really good.
Do you think people have noticed, like I'm just looking at the charts from the 4 stocks earlier and then these 2 stocks, pretty much all the stocks we're talking about have been falling away and they've got high dividend yields. You know, and the further they fall away, the higher the dividend yield happens, which is basically what you guys were talking about when we're talking about the first lot of stocks from that. And I don't know whether our viewers have actually picked this up, because obviously the more the share price falls, the more the dividend yield increases. So by just going for a high dividend yield, and that's exactly why Janine said go for direction first and then the dividend yield. So we had the IPH, which was going up. This one has been going down, but it's looking like it's finding some support. So what you're saying is let's get the direction on these stocks and then pick up whatever the dividend yield is there. Don't just focus on that.
Yeah, exactly that.
Cool. All right, so let's go to Phil now and have a look at another stock.
All right, now next is Magellan. This is a one that has been spoken of so much lately. I mean, it's coming off that huge correction. Look at that, all the way down from the all-time high since COVID. But again, moving back to long-term trend and basing out. Now, if I go back to one of the earlier stocks we covered, which was, I believe, this one here, you'll find a very similar unfolding before the huge upside. And this is so common that things that unfold on our market. Where is it? There we are now. So we've had a big correction. We're starting to move in this sidewaysy consolidation. So right now, I think this is the time to be looking at this stock. And it's very simple. I mean, if it starts to move up and really break these 20, what's that, $12 level, then you'll get really nice insight into where this could go next, because I think a move back up to 30 is more than likely.
Wow.
Yeah.
I can't believe this is a good financial stock.
Yeah.
And look at how bad it has been in the last 5 or 6 years. So, and a very, very good dividend yield. One thing I don't know whether I explained it properly or not. And, you know, in terms of what I was just saying before, how about the dividend yield gets higher the more the share price falls. Do you want to explain, Phil, why that is?
Oh, it can be for a number of reasons. Sometimes it's companies wanting to entice buyers. I mean, I've seen that happen a bit. Other times
So they increase their dividend yield payout?
The number.
Well, if they, for example, don't change anything and the price drops, the yield falls. That's like that seesaw effect. But at some point, what investors need to be mindful of is that the company could turn around and change that dividend and drop it down. And we've seen that so many times in the past, haven't we?
Correct, and that's exactly what you're saying at the top of the segment that we were doing. Because to me, if you buy a share at $1 and it's paying a 10% dividend yield, and then it falls away and now it's 50 cents. Well, really, if you're buying a 50 cents, now you've got a 20% dividend yield because the share price is half. You know, so to me, but you lock that in at that price. So that's why a lot of people go for dividend yields. But I want to talk with you a little bit, Janine, because obviously we've got babyface Phil over there that wasn't around really well, he was alive during the GFC, but didn't go through it like we did. Have you noticed that there's a lot higher dividend yields nowadays in our marketplace right across the board than what there was back in the 2000s? And my thinking is, and you're a conspiracy theorist, I know you're going to get your tinfoil hat on and stuff like that. I think it's the super funds and the big funds pushing companies to pay higher dividends. That's what I think, but I want to get your thoughts.
Actually, I hadn't even thought about it, and you might be surprised about that, but I think that's a really good theory, so well done.
That's it? Seriously. I haven't seen Janine keep her mouth shut for that long, for a long time. Gee. Jeez. I wanted to create a really good discussion on conspiracy theory. She leaves. Okay. Go to the next stock, Janine, if you don't want to come in to
That's really what I wanted. Let's go to the next stock. All right. ARB. Okay. ARB Corporation. You can see there, this has a beautiful long-term angle there that it's just come back to. It actually tested in March 2020 this level at around 1060, 1070, and now we're seeing that angle being upheld again. At the moment, it's early days yet. It's not a full test, okay? So it's just fallen away. It's come up for a few weeks, but we really need to see confirmation of that test, and you'd even be willing to give away a little bit just to have it confirmed, because you don't want to buy a stock for a dividend that's going to just fall off its perch, and that's the thing. So let it at least test this level properly and get through it, and then at least you've got some clear upside to the next level, which would probably be around $26 there. A little bit of factor of safety, because how many times have we seen it where a stock, you know, is paying a really good dividend, and this one's about 8.8%. only to then turn around and the dividend suddenly gets bigger again, like you said before, because the price is going lower. So, but it looks like it's in a really good spot right now.
Well, this is that company. They're in automotive, I think, these guys, in four-wheel driving and that. So you can understand why after the COVID low, everybody's buying caravans and four-wheel drives to go out bush so they get away from the COVID bug. But I was going to start talking uranium to get Janine to start arguing with me. But anyway, before we move on, favourite pick of the bunch, guys. Now, I asked you.
I think, if I can have a quick look. I'm going to go with GrainCorp.
Yeah, I like that one.
GrainCorp.
Yeah.
I'm staying with the one I had.
Yeah.
that
Well,
one,
you took my one, but that's okay. I won't hold it against you right now.
You're both allowed to pick the same stock, Janine. You don't have to have a separate
Yeah,
one.
I'm going to pick Magellan just to be, a bit controversial, just because it's been down for so long. But if it goes down below this low in May or June, forget
I
it.
just wanted to pick. I didn't ask why.
Just wait for it to get through this high, or at least one of these highs here.
Now
I
she
also
wants to
liked.
talk.
I also like this one, FPR, just to add another one to the basket.
I don't know. There's always somebody rogue in the team, isn't there? Always somebody rogue. Anyway, moving on shortly, we are going to get into our hot stock tip. But first, let's answer your questions. Now, Peter writes, can you please check 1414 Degrees Limited? I've had this one only since the middle of May, but bought more in early June. I think this one is going places. Interesting. Go, Phil. I think you can have this one. So he's bought some in May and then bought some more in June, and I think it's going places, but didn't explain why.
Yeah, it would have been nice to know what you were thinking exactly, but let's get to the chart because it's a big call to consider a stock of this nature. Normally, when you see this type of price action, I mean, if we think real support, the way it looks on a chart is in the form of a trend. Right now on this monthly chart, we do not have an uptrend. In fact, we just got moments where the price spikes up really sharply and then falls back down. So right now, I would argue this is one of those stocks where some catalyst has to really change the whole scene for this to give it a new rating or driver. But I would like to see price at least start to resemble something of a trend like we saw in this period where we're seeing sellers try to take price lower and they're not able to. But right now with this erratic price behaviour, this could last for a while. And yeah, from that point of view, I don't know what he's seeing. I would say it's much higher risk, especially when you've got this level through here, that I would think, at least close above here, 11 cents before you got excited. And I would like to see what the sellers do next. If they try and they fail and we get a higher low, then potentially something might be on the horizon. But again, boy, you're playing in an area of the market just by the nature of this price action. This to me just reeks of speculation and good luck. That's all I'm going to say.
I'm just saying he's got pretty tough chicken nuggets, hasn't he?
Tough or?
Much tougher chicken nuggets than I've got, that's for sure.
Yeah.
I wouldn't be anywhere near it.
I think sometimes that, tough's maybe not the word.
Okay.
Yeah.
What is the right word then?
Probably not
Why don't you
best
just
to
say gambling,
Yeah, well, that's what I'm
trying.
trying. Yeah, that's what I'm trying to get at.
Yeah.
Yeah.
But he's bought a stock that he doesn't know is going up, and then he's added to that position. So what if it goes back down? Yeah, anyway, sorry. Thanks, Peter, for your question. We really do like it, but I think what the team is saying, it's a bit of a high-risk play for you. But let's move on now to Brajess's email. He's next, and he says, my question is regarding TWE. The stock has bounced around the $3.35 level, which is good historical level. Just waiting to break above $5 level with a stop loss around the outside bar low. Anything to be cautious about? Janine,
Wow.
Treasury Wines Estates.
Actually, this could be...
I know you love a good wine.
Yeah, not anymore. This could be Brajesh that is
Brajesh.
one of my potential mentoring students. He said he's coming on
One of our
board.
students.
Yes,
Say
he's one of
hello.
our students. We actually did a testimonial some time ago. It could be the same one.
Okay, yeah.
Anyway, looking at the chart, we can see now that this looks really interesting. From a monthly perspective rules, at this point in time, it could be coming off this bottom. It hasn't quite done enough for me, but that's me personally at this low. However, looking at the weekly chart, it actually looks quite nice. And I do agree with what you're talking about in terms of this level. I'd actually like to see it come back a little bit, maybe closer to 450, and then shoot through this level, and then that would be a really good one, and possibly up around $6.80, $7 could be the upside potential. But these are the trades that can also be higher risk, just because the tests off the low may not be complete, because you can see on the left-hand side there's a bit of resistance there. So you just have to be mindful of that, but you've got your stop in place, you're fully aware of it, which is great.
I think he's done a smart job I think he's done a very, very wise thing. So obviously your mentoring's been very good for him.
Well, like I said, he hasn't started yet.
But Jess, you better start because Janine is really championing at the bit to help you out and to help you make a hell of a lot of money. But anyway, Rex is next and he writes, I'm just finishing up my studies and wanting to save up a deposit for a house. I plan on using the stock market to speed up this process. What areas of the stock market would be good for medium to long-term growth? I love that email because how often are we saying to young people, you Gen Zs, etc., that the only way to get into a house is to use the stock market nowadays. You can't rely on just putting money in the bank account and getting almost nothing in terms of interest.
Yeah.
I'm going to go to you, Phil, because you're closer to his age than we are.
Yeah, I think the best thing you can do is, use some of the things we show on this show in terms of, time frames to look at the market. I mentioned earlier about how most people look at the market so close that they fail to see what is really going on. So I think that's
We're saying medium to long-term growth.
Yeah.
Which is smart.
Yeah.
But also what areas? So how would you, I suppose the question is how would you suggest you get started?
Yeah, it's a good question because I've been dealing with this as well with a lot of the guys and girls that I'm doing the mentoring with, in that there's a thought that, I'm going to find a sector and then I'm going to find stocks in that sector. But the reality is when you're doing sector analysis, a lot of the sectors are weighted to certain stocks. So really you're looking at one or two stocks in that sector. You're not getting a full view of how that sector is really performing. And so I was having this discussion with some people and I said, well, why don't you just watch 100 stocks? Once you know what you're doing, it's not that hard to do. Once you set it up, you can watch 100 stocks, get the top 100 on our market. You'll have access to a stock from every sector. You won't miss opportunities if the healthcare sector's pointing down, but there's healthcare sectors that are looking good, because the reality is some stocks, even in bad performing sectors, do go up and stocks in good performing sectors go down. So you can assess on an individual basis. Once you set up your charts on the big time frame, you can monitor them once a month. You can take a look over a coffee on a Saturday. And it won't take you longer than 10, 15 minutes if you've set it up and you know what you're looking for. So keep it big picture, look on those bigger time frames, extend your horizon in terms of what you're looking at, and trade the stock. Don't trade the index or the story, because at the end of the day, that's the asset you're trading.
So many people do that, don't they? They trade the index or the story.
Yeah.
I see so many of those small cap stocks, they're trading the story, not the actual price action of the stock. So they're buying falling knives and everything else. But
and filtering, a lot of, I have this discussion as well with some of the mentors. They say, well, I filter based on the news.
Why?
And I said, well, okay, you do realise that the news is often the last to find out.
That's that's everything. It's old.
Right? And so if you're filtering that way, you're missing a ton of good opportunities. And so your chart is your best friend in terms of getting to the party early. And I think that's a good start. First, get educated. I mean, you can't do any of this unless you've got a plan. Get your book, start off with the book and put some structure around what you're doing. But keep it big picture, I think.
You stole the words out of my mouth.
Yeah, I was thinking the same thing.
You really did. I was going to say to Rex, get a copy of my book if you haven't got it already on the website. The other thing I was going to say to Rex was, because obviously he's a beginner, but I did a video only, I think 2 weeks ago, maybe 3 weeks ago, is how to get started in the stock markets for complete beginners. You'll see my ugly face on the thumbnail. So just click on that. It's like 35 minutes. I'm doing more of these beginner type of recordings as well. The next one I've done and I've recorded, they're just editing now, is about stocks versus ETFs. So it's a really good education for anybody getting started in the stock market. So that's my 2 hints and tips. Now's the time for our hot stock tip. Now Phil's had a chance to take a breath.
All right.
What is it this week?
All right, the hot stock tip this week is Resilience World Corporation. Now the company came out with massive news today as it announced it is shutting its Melbourne brass manufacturing operations and moving more production to lower cost suppliers and US facilities. Now, while it will take a large one-off accounting hit of about $100 million US in financial year 26, most of this is non-cash, and management expects the changes to boost annual earnings before income tax by around $9 million from financial year 27 onwards. Now, this is a nice bit of information. We have seen other companies do this, chop off the dead wood. Wesfarmers recently did it. We saw it with Guzman and Gomez recently
Yes.
pulling out of the American growth story, and their share prices liked it. We take a look at Resilience World Corp on the chart.
Worldwide.
Reliance World Corp.
Resilience.
Resilience. Well, it's,
Hopefully they're resilient.
That's yeah, exactly. But if we go to the chart and have a look at Reliance, the market has seen some buying before the announcement today, and it's still holding up. Which, again, if we ask where this stock is coming from, hugely important level. I mean, $3 has been the base for this stock. Now it's come out through there, so you're getting a really, really strong risk-reward opportunity if this one does venture back to $6, which, if you're going by history, that's where you should look for the next upside move. And it's only going to be a good story from financial year 27 once earnings comes out and you've seen the company be able to, print better numbers because of good cost cutting. That always bodes well for companies. So I think you tie in a share price at key lows, the company able to improve earnings with this latest move, the trend being broken, buyers coming in. Now all you got to do is time your entry, right? And you might have a really nice opportunity.
Looks really, really, really good. Any last words?
Yeah, I think you got tongue-tied here. I don't know what else to say. That could be an addition to this. Just obviously have your risk and reward.
Tongue-tied.
Yeah, when weird for me, right?
It is really weird. It's like worse for Janine, but it's weird for you.
Yeah. But often I normally would say when you're looking for upside targets, always plan for the worst because $6 is near the all-time high. But when it's so clear and defined on this chart that is the range that we're going through, I think it's okay on this occasion to expect a move back to $6.
So that's a 50% growth. So that's really good.
Yeah.
Now, I know a lot of companies, when they go to the US thinking, well, there's 250-something million people there, so it's a big market, I'll make $1 squillion. And a lot of Aussie companies fail.
Yeah.
And so like Guzman and Gomez was a classic example of failing, but then Starbucks failed in Australia too. So, hey, cool, because they make crap coffee.
Yeah.
But the thing is obviously these guys are doing it for a different reason. They're not trying to open up outlets. They're reducing production costs.
Yep.
So it could be much better for their bottom line, obviously with an initial, as you said, that initial $100 million
hit. Yeah.
hit. But to me, that's looking good for a company that's having a $100 million hit.
Yeah.
What do you reckon, Janine?
I don't mind it either. I think that level is hugely strong. It's just a question of that downdraft, and it's broken that trend line which Phil identified. There are still risks, of course, with this, and it depends on how the market views it going forward. So, look, I would like to see another retest of that line, and I think Phil may have mentioned that before it then moves up.